I started to get educated about, building wealth, it became apparent to me that I couldn't save my way to wealth. And although I was very fortunate to be able to look forward to a pension and a defined benefit program, I wanted more today, the here and now versus when, you're 55, 65, 70. I just didn't subscribe to that model anymore.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. I hope you're having a great week this week. We've got another great guest for you today. Tim Lyons is joining us from the New York area. Actually lives in Connecticut, but he's still a New York City fireman, but he's a real estate investor. I'll tell you a little bit about him, and then we'll bring him in. Like I said, Tim's a fireman, but he is the co-founder and managing partner of Cityside Capital, a real estate syndication investment company that focuses on commercial real estate assets that yield strong returns. Lieutenant, New York City Fire Department, where he served for 17 plus years. Before becoming a real estate investor, he also worked as a part-time RN. That's awesome. My wife's an RN. Tim's initial goal with real estate was to create passive income and in turn, be able to spend more time with his wife and three girls. After partnering on a small multifamily property, he saw firsthand the power of real estate investing as an opportunity to create passive income and build wealth for his family. So he jumped in, started Cityside Capital with the goal of not only growing his own portfolio, but also to help others realize the power that real estate investing can have on creating wealth. We'll jump into all that, but thanks so much for jumping on the show today.
Well, Lee, thanks for having me, and it's good to see you again because you were also a guest on our podcast. And
yeah, it was fun. Yeah, glad to turn the tables. Excited to hear more about your story, Tim. I mean, I know it pretty well, but excited to share it with my audience. So, Tim, real quick, let's start at the beginning. Take us back. You were a fireman. It sounds like you were maybe, hey, what else is out there? Or maybe I need to add something like this is a good, I mean, obviously, must be a pretty good job, still been doing it for a long time, but something was missing. What was in you? What had you heard? And maybe what did you learn? And why did you decide to jump into real estate?
Yeah. So long story short, I mean, I was a hard worker, right? 70, 80, 90 hours, overtime at the firehouse, working as an ER nurse, life was good. Bills were paid, 2 vacations a year, really nothing to complain about, pension to look forward to. But there was something that I needed more of. And I think it was really time, Lee. I wanted more time with my babies. I wanted more time at home. I wanted more time to create my own life instead of just really, living in a rat race. But it was two jobs that I loved. So it really didn't hit me all that hard until, I had 3 little girls. I started, it was bad enough with one, but I really wanted to reclaim my time. And when I started to get educated about, building wealth, it became apparent to me that I couldn't save my way to wealth. And although I was very fortunate to be able to look forward to a pension and a defined benefit program, I wanted more today, the here and now versus when, you're 55, 65, 70. I just didn't subscribe to that model anymore. So really 2 things. I did research, went down an incredible rabbit hole of podcasts, audiobooks, books, going to meetups, virtual meetups. And 2 things stood out to me: real estate and owning your own business. And at the time I had 2 jobs, so owning my own business didn't really seem that attractive. So real estate was what I really kind of dove into. Growing up, I subscribed to the accumulation model, right? Pay off your mortgage. First go to school, get a good job, right? Max out your 401k or 403b. In my case, it's a 457. Maybe do a Roth after that or an IRA, and then, once you do that and you clip coupons and you save money and you put it into mutual funds, whatever you can, and in 30 or 40 years, you'll have X amount of dollars. And I think I got blinded by that. Yes, I could have $1 million or maybe even 2 million, who knows? The equity in my home, all those things that you kind of get taught, or I got taught by my parents to say, this is what you should do. We didn't necessarily do it the right way, but now this is what you should do. And then when you're 65, you peel off 4% and you kind of outlive your money, or that's the goal at least. And Maybe when I was young that made sense, but when I had my little girls and I felt like I was missing their lives,
Yeah.
I liked what I did. I love being a New York City firefighter, but at the end of the day, I also want to be dad, and I want to be with the coaches of their teams, and I want to be able to go on their field trips, and I want to be able to ride bikes to school with them, and
Yep.
do all the things. And I felt like I didn't have that without giving up some sort of income by trading my
Right.
time
Okay.
for
Got it.
money.
So
That's
you're
exactly it.
looking, how can I keep making the same amount of money, kind of keep on the same financial path, but not trade so much time for it? So you're looking for something more passive, what you saw, if you own a business, and you've got people running that business, then it can spit off cash flow, but that's very time intensive to get going. And then there's probably times like, you see a lot of people that kind of run their own businesses and they work a ton of hours. And then you saw real estate where, if you dig in, you find out like real estate can be pretty passive. It can happen. You can have someone manage it for you, things like that. So you jump into that. Tim, how did you get started? Let's start there. How did you get started in real estate? What did you do first?
So coming from a scarcity mindset, right? Very modest upbringing. I was scared about deploying any kind of money that I had saved because I was just nervous. Real estate was taught to me as risky. And, people like, blue collar guys like me, we didn't do real estate. So I ended up, when I finally became comfortable with the asset class, I convinced a friend of mine to go in with me 50-50 on a 3-family property. So there was 3 units. They were each 2-bed, 1-bath. And, that's what we did. We found a good deal after a little bit of searching. It cash flowed from day one. We were nervous. So we got an LLC to buy the property, which means we had to get, commercial financing. So we didn't qualify for the best type of financing, but we were cash flowing each from day one, $400 or $500 each a month.
Nice. Yeah.
But I was mowing the lawn, taking turns, right? Hey, Craig, is it your turn or my turn? The leaves, the snow, the light bulb changes, whatever it might be. I was always.
So you got yourself another job, another thing.
My wife's like, I thought there was like passive income somewhere. I mean, this is like a third job. So I realized, look, that was a great experience, but I needed something more. And that's when multifamily, came into my life.
Got it. And multifamily, why? Because you don't have to mow the grass. You don't have to do all that stuff.
Well, because there's property management, right? There's economies of scale, and I'm a math guy, so it makes sense to me, right? Income, expenses, NOI, debt, everything can make sense to me when you can assign values to it. I just had to learn the process, so that's what I dedicated myself to.
So you start running some numbers, Tim, and you're saying, okay, there's 3-unit proof of concept. It's spitting off cash flow every month for me and my partner. So there's big enough pie for more than one guy. But probably doesn't make that much sense to, if we have someone manage it, it's harder to manage smaller properties. They're going to charge us more. So you're going to give up a lot of the cash flow, and then it's really low. And so, but still proof of concept. So let's do more of this. Let's go. We're not losing money. It's not as risky as maybe some people made it out to be. So let's get some bigger properties that are easier to manage, so we can get property management on it. They're bigger, so it's economies of scale, so they can afford that property management and still spit out cash flow. But to do that, Tim, you're going to need a lot more money, right? So how do you get over that hurdle?
So I realized that I had to start raising capital for deals, right? But listen, I think so many people out there, Lee, just like you and I, realize that real estate is an asset class that they quote unquote should be in.
Yeah.
But they don't know where to start. They don't know who to trust. They don't know where, and then it gets really hard very fast. You say, you know what, real estate's not for me. Or, my great uncle Johnny lost money on a flip 35 years ago. So therefore real estate's not for me. And I saw that as an opportunity to say, well, look, no, it is for you. I've done it a little bit, and here's what I'm looking to do. So I just started telling people what I was doing. Here's what I'm doing. Here's what I did. Here's what I'm looking to do going forward. If I found something like that, would you be interested? And I just started telling people, whether it was friends, family, college roommates. And I started to hear a lot of yeses, or a lot of maybes, but not a lot of hard no's. So I knew I was onto something. So ended up getting into a 43 unit in Pennsylvania with a mentor of mine, who kind of showed me the ropes of commercial real estate, and ended up raising a little bit of money, and that became my passion. I really said to myself, man, if I could raise money for real estate as like a gig, that would be perfect, because that's like in my wheelhouse. Being a New York City firefighter, I wasn't leaving for Austin, Texas, or Phoenix, Arizona, or sunny Florida, right? I wasn't about to do that, but I could do that from New York.
Yep, absolutely. So again, probably another proof of concept, Tim, that now you can raise some of the money and bring investors in on this bigger multifamily property that you can get professional management on it. And I'm assuming get cash flows too, and now your investors are seeing that nice cash flow, and so they're seeing, that passive income where they just give you the money, they don't have anything to do with it. No, they're not trading any time, but their money is making money, right? Good experience there with creating passive income, not only for you but for your investors.
Yeah, I mean,
Nice.
those first investors have now done subsequent deals with us because there was their proof of concept.
Mm-hmm.
I have $50,000 into that deal, right? And I get 291.67 every month, like clockwork. And then there was tax benefits, and so there was a growing that I had to do through this process. But as I grew, my investor base grew, word of mouth spread. People started to call me instead of me just emailing my friends and family. People started to call me or email me.
Awesome.
And that's really how Cityside Capital was born.
That's awesome. Tim, can you fast forward real quick? Where are you guys at today? What do you own? Where? All that kind of stuff. How much have you raised? And all that.
So I probably should know how much we raised, but it's probably just under 20 million in the last, say, 2.5 years, 3 years maybe. And we've partnered on about $1.5 billion of commercial real estate, mostly multifamily, a lot of Sun Belt, but a little bit in the Midwest, and along the East Coast and the Carolinas, stuff like that. So that's the majority of our portfolio. Then we have a partner that does self-storage. They're the 17th largest self-storage provider in the country. And then we have another partner that does industrial triple net lease opportunities.
Wow. And Tim, your brother works with you full-time as well? Or I mean, and I guess you're not full-time, but is he in the business with you as well?
He is in the business. Yeah, he lives down in Charlottesville, Virginia. So we both, we have a telecommute conference multiple times per day. But so he's my partner in Cityside Capital. And actually, just to stack on top, we are registered representatives of a broker dealer that does nothing but commercial real estate offerings.
Awesome. Man,
and I can dive into that if you're listening.
Yeah, definitely interested in that piece of it, Tim, because I would love to talk to you more about just capital raising in general. Where you were before you got into real estate, Tim, imagine that's a lot of people that you're talking to, that's where they're at, where real estate's risky. I know, your great Uncle Johnny lost some money on a flip, whatever. And yeah, man, come on, I'll just put my money in my 401k. That's what everybody does. It works. Stock market always goes up, right? Until last year, until Fed raised, other things. But everything else is too risky. I'll just do this. I assume they're kind of where you are, Tim. So let's jump into that a little bit. How have you guys have obviously gotten past that. You raised almost $20 million. That's incredible, Tim, in 3 years. So congratulations. Just tell us a little bit about the journey that you take people through when they haven't heard maybe they have heard about real estate investing, but they think it's risky. And then you give them a point where they're ready to deploy $50,000 into a real estate deal, maybe states away, and they don't have control over it.
Well, you know what? Social media and the internet, I think, has unlocked a lot of opportunities for people over the last, I don't know, decade or so, right? In 2012, with the Jobs Act from the Obama administration, there was a clear divergence between the haves and the have-nots in maybe some real estate type of private equity deals. So there was something called a 506B offering that you had to have a substantive relationship with the sponsor of a deal to be able to know about it, right? So a lot of those deals were kind of kept to the golf clubs, the country clubs, the boat clubs, whatever, and if you didn't know someone doing it, you didn't hear about it. In 2012, there was a 506C option that was kind of introduced in that Jobs Act, and that allowed for marketing these types of deals to accredited investors only. But people started to say, whoa, what is this? And I've never heard of that. My financial advisor never told me about a Regulation D 506C offering, in real estate. I can get paid monthly or quarterly income, and I can, potentially have tax advantages and all these deals, right? So, basically because of that, we exist today, because people have money to deploy. They know that they should be in real estate, or they desire to be in real estate, but they don't know how to get started. They don't know, they don't necessarily want to be an active landlord, right? And then, unfortunately, passive investing or, making money while you sleep, that doesn't really sell too well. That sounds like a scam or, Bernie Madoff, Ponzi scheme, right? So an incredible amount of what I do is, educating investors, like you said, right? So by podcast or videos or speaking on stages, writing articles, doing talks on webinars. I mean, like I've done so much to get myself out there, but to really teach people that there's an alternative to the stock market. There's an alternative to Vanguard, to Fidelity, not taking anything away from that. But, when you start to think about it, how many people do you know that have become quote unquote financially free by investing in mutual funds? Or, if you have a financial advisor, is he truly financially free? I mean, if he stopped working tomorrow, he or she stopped working tomorrow, do they have passive income coming in from these mutual funds or ETFs or stocks that can truly support them? And I started to think not, right? So that's really where we came in, and it's through the education piece that we've really grown the most.
Yeah, I would love to dig into that, Tim. What are some things you're educating? Like maybe what are the top 2 or 3 fears that investors have, or kind of pushbacks initially, and then what are the 2 or 3 things that you're educating them on to maybe get them past those fears?
Yeah, the first thing is process, right? How does what I do work, right? So it's all right. So I take them through a life cycle of a deal. I always use like a 5-year time horizon. How do you, so you invest, say, 50,000 in a deal. We use that to buy, along with a lot of other people, to buy this big piece of real estate. We run it. We have cash flow from operations that you get monthly or quarterly. And then say in 5 years, right after we implement the business plan, we upgrade the units, we increase the rents, we modify some of the expenses, and now we're at the point where we can sell this for a profit. Well, guess what? Here's how it gets unwound, right? We catch up any money that we owe you from what's called a preferred return structure. Then we give you your original capital back, and that blows people's minds. They're like, wait a minute, you're going to give me my original capital back? Like the golden goose isn't killed, right? And then correct. And then we give you the appreciation on top, right? And all during that, you are, given tax benefits in the form of a K-1 tax document at the end of the year. That everybody's different, right, with their tax stuff. This is not a tax podcast, but you can use there's something called the passive income rules in the IRS guide. They allow for different levels of tax deductions. So so I kind of tell them about that, but it's really process driven, right? What does it look like for you to work with a company like us? And that really alleviates a lot of people's fears. And they want to know about track record. They want to know about markets. They want to know about, if it's so good, how come I haven't heard about it before? And, so that's really kind of where I spend a lot of my time talking to people.
So you get them past that, Tim, maybe what are some other fears that they have? Like, okay, I think I understand the process, but, what else is there? And then how do you educate them to get them past that?
Yeah, I'd say the second thing, Lee, is liquidity, right? They go, well, can I just buy a REIT, through Fidelity or Vanguard? I'll real estate through that. So then I have to just tell them, what the difference between a private placement is and the difference between a REIT, how income is treated, how you don't get appreciation, how, yes, it's liquid, a REIT that you can buy and sell in the open market. And what we do is illiquid, right, during the hold period. But it's really kind of, comparing and contrasting both of those different types of investment vehicles and which one is more aligned for what their goals are. If your goal is to have, instant liquidity, then, what we do is probably not for you. So it's really kind of, so I would say the process is a big hurdle. The liquidity piece is another hurdle. And then it's really, becoming clear on what kind of asset class, means the most to you. Like, what do you align with more? Like for us at Cityside Capital, 90% of our business is multifamily because we just realize that people need food, clothing, and a place to live, right? At the end of the day, those are like the biggest pieces of everybody's lives.
So Tim, so really you're talking about a lack of liquidity, but you mentioned a couple of things that I want to hit on a little bit more. So you mentioned that with a REIT, so if people don't know what that is, basically somebody like you, Tim, that's doing tons and tons of deals, and you patch them all together, and you're on the stock market. So someone can buy into your company now just right through the stock market, but you said you don't get appreciation. Explain that a little bit.
So when you buy a share of a real estate investment trust, a REIT, right? The way that that's drawn up as an investment vehicle is they need to return the owners, the operator of that REIT needs to return 90% of the cash flow back to investors, right? So there's an instant 90-10 split. Cash flow, 90% of the cash flow goes to investors, 10% is retained by the operator. But that's when it's paid out in what's called a dividend. So that's dividend income, which is treated differently than passive income from real estate. So basically you have, active income from your W-2, that's one bucket. Then you have passive income from things like real estate investing, with a direct real estate, like things that I do. And then you can have dividend or what's called portfolio income. And they're all taxed a little differently. They're treated by the IRS a little differently, but the passive income is treated the best because you can take what's called depreciation losses against passive income up to a certain amount of money. But you don't get those pass-through deductions from a REIT like you do in a deal like what we do, what Lee does. So, yes, you can sell it on the open market, you can buy and sell. But for example, like, there's a big group, I don't want to say their name on the podcast, right? But a big Wall Street company that owns billions and billions of dollars of real estate, and they just walked away from a commercial office portfolio in the hundreds of millions of dollars because people were trying to redeem their shares of their REIT at a blistering pace, and they couldn't sell enough assets to satisfy the demand. So they gated down their, investors' ability to withdraw these funds, which they're allowed to do. So there's also, I always talk about, yes, what I do is maybe a little bit more illiquid, right? But there's, I would argue that sometimes that's a good thing, right? In times of fear,
right?
You don't have that instant ability just to sell, to become liquid because, listen, at the end of the day, whenever I've spoken to anybody who's wildly successful in real estate and I ask them, if you had to do it all again, what would you do? And without fail, the answer every single time is, I wish I would have bought more, especially when there was fear out there.
Yeah. And then they probably say, I wish I wouldn't have sold too, don't they? Like a lot of times you just hold, man, you hold long term. That's what you're talking about. And that is the benefit of the illiquidity is that yes, you can't sell, but neither can the other guys that are in the deal. The REITs are down big, right? And that was, there's some really scary examples of some REITs that are like not just down in the stock valuation, but like they're really struggling. There's some scary stuff going on, but because anybody else can get out whenever they want, it's just like all the other stocks. Like they can go down tomorrow, like a lot. Yeah. And so the property that you own that doesn't. Nobody can get out. So we're all in it together. I just think you really get paid for that illiquidity. And the other thing, with appreciation, Tim, with a REIT, when they sell a property, they're not sending you a big bonus check, right? It's that dividend that they told you you're going to get. It's nice and steady. But what you're talking about is you go to sell something or even refinance something. And, you can suddenly, hey, you've been getting this dividend, but now we get this big bonus on top of it. And then what you were talking about, Tim, like you can really blow people away that this would never happen to REIT. That's like, hey, you're going to keep getting paid off this, but we're going to send you your money back. That would never happen. But when you refinance with an apartment building, that can happen. I think that's the most amazing thing. You buy an apartment building, hold it for 5 years, pay down enough debt, there's enough appreciation, you refinance, and that cash out refinance allows you to get your investors' money back. But they stay in the deal and you actually still own part of that deal and you still collect, if you want to call it a dividend. It could never happen with the REIT. So I'm with you there, Tim. I think we keep talking about some of the benefits.
And I want to stack on top of that refinance. Yeah. That doesn't always happen, but when it does, it's a tax-free liquidity event for the investor.
Yep.
Because, as an investor, you're not taxed on debt, right? So it's a win-win. And then you still maintain your basis, in the deal. So you still, create, keep capturing that cash flow. And I would argue hold it forever, right? If you have infinite returns. So yeah.
Tim, anything else that you would go just education wise? Any of the big points that you usually hit with maybe newer investors to the real estate space?
Yeah, so I really talk about the conveyor belt. I don't know if you've heard of the conveyor belt, right? Like, if you're thinking about, if you're say you have a liquidity event or you're just a high earner and you're looking to deploy capital, like what if you can visualize with me for a second and you put $50,000 into one deal each year for 5 years, right? So year one, right, that slides down the conveyor belt. And year two, you put another 50,000 on the conveyor belt. Now both of those deals slide down year 3, year 4, year 5. So now you have 5 deals on the conveyor belt, each one having $50,000 in value. You're collecting cash flow now on all 5 of those deals. At the end of the 5th year, say the first one you put on that conveyor belt now falls off, right? It sells. Now you get your original 50 back. You get hopefully some good appreciation check on top of that. But now you're playing with house money, right? You can put that 50,000 original plus the appreciation in year 6 now, right? And now you can, just keep on recycling that money. So when you tease that out, and you can use all different assumptions, right? But if you keep it really simple, like, you can really get started with building cash flow over that 5 years. And then when you have that appreciation, and putting it back into another deal in year 6 and 7 and 8, now you can really be recycling money, or what's called the velocity of money. And who knows, maybe you have some refinances in that period, and, you could really supercharge, because I would argue, Lee, my idea of wealth used to be having a certain amount of money in a certain account.
Right.
That
a
was
number.
wealth.
You're hitting a number. Yep.
I'm hitting a number, right? And now I'd argue that it's having my income on a monthly basis sustain my monthly obligations, right?
Yeah, I love it. Right.
And we haven't even talked about, like, if you're with Lee, and Lee, if you have a deal that exits in year 5, but then you have another deal right behind that, you can do a 1031 as a passive investor, right? And then you don't pay any, or you suspend your capital gain,
right.
And now you can really supercharge, putting that money into another deal. So, I mean, look, there's so many ways to do real estate. There's so many options. There's so many asset classes. This is what I'm passionate about. So I really meet people where they are. If they're brand new, I got to keep it real simple, right? If they've done some real estate, or they've done some education, we can really dive into a little bit more of, like, taxes, or, different types of stuff. But that's the exciting part. I didn't invent all this stuff, right? But it's really not like we're recreating the wheel here.
Right. So, Tim, I always like to ask my guests here as we wrap up, what would you say is a key ingredient for being a successful real estate investor? Let's apply that to, like, someone that comes to you and they're like, all right, Tim, I want to talk about all this stuff, but I don't know if I'm a good fit for this. What's maybe something you would say, hey, if you've got this characteristic, you've got this ingredient, you are going to be a good fit for maybe a passive investment in a real estate syndication?
You have to be willing to abide by the equation that I use all the time. It's education times action, right?
Yeah.
No one's going to do this for you. No one's going to, put the white gloves on. Nothing is as easy as it's sold as being, right? But if you're educated by reading books, listening to podcasts like yours, just doing your own due diligence and whatever that means to you, and then taking action after that, right? Because if we needed a PhD every single time we had to make a decision, we would never get out of our own way, right? So, I mean, for me, my personal thing is, once I know 80% of something, I'm ready to go, right? Ready to take that action. So yeah, it's just living by that equation.
That's really good. Tim, I'd like to ask as well, what would you say is a key ingredient for you, for others, to maintain your priorities while you're chasing passive income, while you're building this real estate portfolio? Obviously, family is important to you. I don't know if you're a man of faith, but there's things outside of real estate that are more important. So I guess I'd ask, what's a key ingredient to maintaining success in those areas that are more important? And on top of that, have you reclaimed your time? You talked at the beginning, you wanted to reclaim your time. You've been in real estate for a little bit now. Are you on your path? You're on your way reclaiming your time? Have you reclaimed your time? How's that going with you as far as having success outside of real estate because of your real estate investing?
Yes, I mean, I once I had the proof of concept with that 3-family, I say that I retired from being an ER nurse. So I right before COVID, I said, that's it. I'm going to go all in on real estate, and I get to work from home now, right? So I'm home. I can drive the kids to school. I pick them up. I'm off the bus with them. I'm doing snack. I'm doing the chauffeuring activities after school, and I'm here to do that, right? So the biggest thing is time blocking. I'm very protective of my calendar. I have everything set up in a system, for calls and podcasts and everything that I'm doing, traveling. It's all done through my one calendar that runs everything. And there's times that I've actually just carved out just for family time, weekends, Sundays, this way I could really maximize on what's important to me.
So it sounds like it's going well. You've reclaimed a lot of your time.
I have. That's not to say, though, that I haven't been on a late night call or an asset management call.
Yeah. Well, you're a hard worker, man. I mean, you like to chase. You're not going to be able to get it out of you totally. But it sounds like you're more in control of it, right? Like you're deciding. I mean, if you're on a late night call, maybe your kid's in bed already. I mean, because I do a lot of that same thing, a lot of those same things, early in the morning, things like that. But man, that's great. So happy to hear that. And that's why you're doing what you do, educating others that they can have some of that too. And I tell people all the time, like, you don't need to quit your job or retire from one of your jobs or do this as much as you and I do, Tim. But if they invest with somebody like you, they might not have to work quite as much, or don't take that next promotion that requires even more time. Like, just stay put, but put your money to work for you. Let your money make that extra, even, extra $5,000 a year, to allow you to take a vacation or two that you wanted to take, that you thought you needed to take that promotion to be able to take, or send your kids to private school, right? Just little things like that. It can really be game changing if you put your money to work for you. So this has been great, Tim. What we've got here for you is this Cityside Cap. That's Cityside, it's spelled out cap.com. Is that the best place for people to go to find out that, see all that education that you guys are putting out there?
Yeah. So just go to citysidecap.com. You can schedule a call. You can see podcasts, videos. We have a free download on the homepage. And yeah, I'm always available to chat. Even if you're not ready and you just want to see what's going on, or you want to chat about all things real estate, I'm ready to rock.
We'll put that in the show notes. Awesome. Well, Tim, thanks so much, man. This has been really helpful. Again, where you were, a lot of people were there. They hear about real estate. They kind of know, man, a lot of people make a lot of money in real estate, but it's risky. I can't do it. You're a great example that you can, and now you're educating other people that you can. So really appreciate that. Thanks for coming on today, Tim.
Wade, thank you so much. Appreciate it.
Yeah, have a good one.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.